Bitcoin traders respond to inflation data in a big way. Do Bitcoin bulls have enough momentum to push higher? That is the question. Hey guys, it's Keith Allen, and a lot going on here this week. I told you on Monday that I really thought that Jay Powell's speech and the week of data we had coming out yesterday, today, and tomorrow were really going to be catalyst for what's going on here this week. They'd be catalyst for volatility, and that, of course, is what we're seeing play out here. So let's take a look at the charts and see what impact this is having and why it's happening the way that it is. First thing I want to do is just give you a quick glance at fire charts so you can see the move that has transpired so far, and possibly if something develops between now and the time that we end this live stream here. So with that, let me go ahead and share the screen as we head over to the Bitcoin weekly chart. On fire charts, we can see some of the activity that has been transpiring here over the last through the last week, obviously, but especially obviously what's going on right down here as we saw big moves here, right? So yesterday we got this sell wall, about 28 million bucks. This is on Binance, by the way. This is a $28 million sell wall. And I really didn't feel like it had any intention of getting filled. What I felt like it was here to do was to push price down. It did push price down nominally, I don't know, about $1,000 or so initially, and then price started to climb out. So we had yesterday's inflation data around this time, right? This came in before the inflation data. And when the inflation report came out, yesterday was what? PPI yesterday. This was kind of mixed, and interpreting inflation data can be tricky sometimes, right? So initially, it's not going to show me yesterday. Let me get to this whole week, right? And let's see if we can see that. Okay, so yesterday we had the PPI come out, and it was a little bit on the hot side, in my opinion. And the market didn't really respond as negatively as I might have thought. Of course, we did have Fed Chair Powell coming up after that, speaking from Amsterdam. And he kind of summed it up. And what he said was, after the revisions and some further analysis, they felt like just maybe this was not really a hot report, but it was a mixed report. I think that they can make the numbers say whatever they want, is what it seems like. But the market really interpreted this as not a big deal. And during Fed Chair Powell's comments yesterday, he stated again that he felt like policy was restrictive. He felt like a rate hike would not be the next move, at least not in the foreseeable future, that their next move would not likely be a rate hike, which is obviously positive for the market. But a little nuance in there that he slipped in that we hadn't heard so much before was, over the last year, he would say that he felt like policy was sufficiently restrictive. And yesterday he said policy is restrictive. And later on, he went on to say that he felt like we would have to wait and see if it was sufficient, meaning really nothing is off the table at this point. So I think that the market, and again, I'm no economist here, so this is just my interpretation of things. I think that the market still has one or potentially two rate cuts baked in before the end of the year at some point. We just have to, as the chairman said, remain patient and wait for things to happen. The problem is the market's not really patient, right? And today we got some good news on the inflation front. Core inflation data specifically came in, in line with forecast and a little bit lower than last month here. So that was obviously positive. And I'm telling you that the instant that news came across, we saw this pump happening right here. And it came in pretty robustly, right up to where that prior wall was, and then a little bit of a regrouping, and then up again, and then the 65K level where we had some pretty good resistance Notably, we have the 100-day moving average right above here. I'll show you that in a second. But this broke up, right? Rather than just sit here and wait to get filled, it actually broke up. So it's creating a little bit of an opportunity here. I'd say the door is open. How far are bulls going to run through it, right? That's the question here, and remains to be seen, right? So let's look over now on the candle chart and see where kind of the technicals line up here. As you can see here, we have, and I've been talking about the moving averages. I talk about them frequently. We do have a death cross formed here between the 21-day and the 100-day moving average. That's a bit of a lagging indicator, and if you look at history, you can see that when these cross, it really we're looking at what, the 21 and the 100, right? So when we see these death crosses happen, oftentimes we'll see a little bit of a, like the move has played out a bit. We'll see a little bit of a pump, and then things start to degrade a bit more. So this is something that we'll watch, obviously. The fact that that's not what I meant to do. The fact that we've run into resistance here. This is the next strong level of technical resistance, would be this 50-day moving average. That's the red one here, right? So here's what has to happen here in the short term. The first thing that has to happen is we have to close this daily candle above the 21-day moving average, and it needs to hold there. It's been a difficult task to do that, as you can see. Let's look past over the past month, right? It was back in the beginning of April since we have had any full candles above this line, right? And we've been challenging it ever since. We first lost it way back in the middle of March, and it's been a battle. And not only has that been a battle, let's look at this in comparison to this prior top, the 2021 top at 69K. This was very difficult and remains very difficult to beat and hold. Right? We've worked across it, but we've wicked down so many times and broke down again and again. We're doing the same thing here with the 21-day moving average thus far. So we do need to see full candles printing above. We had that opportunity after the Sunday close. It didn't happen, right? We had a Monday candle opened above it, and it obviously broke down. Tuesday obviously broke down. Here we are Wednesday. We've climbed back above it. Can we hold above it? If we don't, well, then I think we go retest lower. And I think that it's important that we, and this is my opinion, right? And this is not advice, this is just my opinion. My opinion is that we need to see Bitcoin test support, and it needs to test the local bottom, right? We thought we had a bottom at 59K, and it turns out we didn't, right? And then we thought we had a bottom at, that broke through, right? It broke down into this 56.5 level. I honestly expected it to go to 55 there at that point. It did not. So now what's interesting is, over time, the moving averages change, right? So where I'm looking at support, you know how much I love that 21 moving average. Let's look at it on the weekly chart. I showed you this yesterday. It's now moved above that lower low, right? It's now sitting just around 57K. So with a lower low at 56.5, if we were to retest this level, or test it, I should say, it hasn't even been hasn't been tested the first time, right? Nor has this. And this is why I still have a little bit in the back of my mind concern that we could visit these levels if we don't see more bid liquidity coming in. At the moment, no sentiment for this down in the 40s, but there is some bid liquidity stacked here between 50 and 52, which is in jeopardy of getting tested if we lose this 21-week moving average. Now, if we test it and we hold, guess what? What is that? That would be a higher high. And that's what we really need to see, in my opinion, to start building this next leg up. Is it time? I don't know how you put a timeline on this. I think it just comes down to what the fundamentals are in the market. And fundamentally, we do have a lot of positive news. Obviously, we had the halving. Obviously, we have ETF flow, which yesterday, by the way, was the second consecutive day of positive flows. Let me turn off these notifications. I don't know why I keep forgetting to do that before I start these, but no more interruptions, right? So a couple of days of positive flow here, despite a little bit of selling from Grayscale and no buying actually from BlackRock yesterday. But we did, ARK B was good for 133 million. So this shows me that they like the levels that we were at here in the low in the low 60 range as an area to accumulate. In terms of what this move is from here, is it going to be a sustainable move? Is this going to be the next leg up? Or is this just an awesome swing trade, right? Look at this resistance at the 50-day moving average as expected. And as we look at that in terms of liquidity, we can see liquidity is moving a bit here, right? Liquidity on the move. And that might make things interesting. We have another set of numbers tomorrow, and that would be the jobless claims. The jobless report comes out tomorrow. And this is another one that I think is pretty easy to understand. If you're a Fed watcher, this one would be translated as bad news equals good news, meaning a hot jobless claim number would mean that unemployment is rising a little bit. This supports what we saw a week or two ago when the unemployment numbers came out and they ticked up, I think, 0.1%. That would support that theory. And that is one of the key metrics that the Fed is watching to determine when they're going to cut rates. And so if we see this number going up, continuing claims going up, and or initial jobless claims going up, then that would support that narrative, and that would also lend some support to the possibility of 1 to 2 rate cuts here before the end of the year, if that trend continues, I should say, right? So we're looking for a continuation of that trend, basically. Okay, it was up a little bit last week, and if that trend continues, that would support that narrative. If this is a cooler number, then that obviously goes in the other direction. And if it's a major miss in either direction, I think that really gets things moving. If it's a slight miss or even slightly hot, maybe not such a big deal. So we'll see how things play out, right? That's all we can do is be patient and watch how things are moving. And really, despite all of this, despite the inflation reports, which can be hard to gauge, and despite the technical analysis, which can be overshot many times, right? We can always look at liquidity in the order book and get a feel for what's happening. And we can also look at the order flow, and you can see how robustly this was bought. Okay, this was, a lot of liquidity was moved here, right? On this news, some was pulled in both directions, some was moved in both directions, and now we can see we have a little bit here above 65 up to 65.5, which was our prior high, by the way, right about so. And so, this right now is a concentration of about 26.5 million at that level, and obviously more ask liquidity laddered above. Can we get through this? Do bulls have enough momentum to get through this and then start working their way back to this 70K level? That remains to be seen. So that's what I'm watching. I'm watching the order flow down here. I'm watching the order book here, and we can zoom in here to the daily and see if we have any subtle movements that might influence this. But also note that this liquidity down here has been cleared out now. And so you want to see this replenish. And if it doesn't, that opens the door for that retest, further down. We do have this smaller bid wall here. Not much of a wall. It's less than 10 million bucks. We have another one here at 60K. So those are things to watch. In my opinion, the real concentrations of liquidity are what it's going to take to get things moving. So let's zoom out a bit and see where it is stacked. Obviously, we have a lot stacked above that 70K range, and a bit stacked above, where we are now, above this 65K level, right here, right? But look below, right? We have this one ladder, and it's decent, no doubt about it. It's decent, but not as much as I'd like to see. I want to see these big, bright, high volume concentrations. I'd love to see that right here, and that would give me some more confidence that we could shoot through this and start grinding into this liquidity up above. Otherwise, we're just waiting for it to rain down upon us, right? We're waiting for this to thin these guys to get impatient, to start dropping these asks down lower, and that may be what it takes. It may be an extended period of consolidation until we see that big concentration of bid liquidity appear down here to push things forward. That's what I'm watching. Hope that gives you some insight of what to watch yourselves, and I hope that you appreciate the content. If you do, by all means, please smash all the buttons. Help me grow this channel for sure. And by all means, please leave a comment. I love the comments. I engage with each and every one of them, and I appreciate you guys for taking the time to do so. Gonna wrap it at that, guys. If I see anything noteworthy coming up today, I'll do my best to break in and give you another update. In the meantime, thanks for following along. You can catch these all the time. Hey, Mike, good to see you here. I appreciate you coming back and following me. Hope these things are helping you guys out, man. And thanks again. We will be back at it again tomorrow, watching for that report. It comes in at 8:30 a.m. Eastern Daylight Time, and of course, like I said, if I see anything noteworthy happening today, I'll do my best to keep you guys updated. Have a good one.